Yo guys, I hope you're good. I hope you had a good week last week of trading. So today I'll be just doing a market recap of what happened last week. Okay, so let me just go ahead and delete everything on the chart. Okay, yes. So let me just go ahead and delete everything. So let's start on our daily time frame. Okay, as you know that it's either you want to trade one trade per week or two trades, which is the one of catching the high or low over the week. Okay, this is one model, okay, of catching high or low of the week. Okay, so that is the one which I was looking at last week. Okay, so what I was anticipating is that the market to come ahead. So first thing first is that you need to go ahead and mark your key level off. Okay, so this was the key level that I was anticipating the market to reverse at. Okay, plus if I go on the weekly time frame, is that I'm looking for a key level to trade off over here on the GBP USD. We had a fair value gap which was tagged here. Okay, we had a fair value gap which was tagged over here, right over there. Okay, here we had a relevant high on the euro USD. Okay, we took out a relevant high over here, of which this was a precision swing point. Okay, this was a precision candle. This was a precision candle. Okay, so that was that on the higher time frame. So we have already marked off our key level on the higher time frame. Okay, now dropping down to our lower time frames, that we want to see what's actually happening. Okay, what's actually taking place. So over here on the GBP USD is that we went into this candle over here, which was a model one. Okay, this candle over here was an OB, it was a model one. This was a candle. This is another key level which we had on the GBP USD, tagging it right over here. Okay, because why? We took liquidity above and we managed to close below, and the market never retested this candle over here. So which means we went and tagged this candle over here. Plus we had also a what? A fair value gap right over here, which was not tagged also. Okay, I can go ahead and delete this one over here. We had a fair value gap which was not tagged, which was tagged right over here. Plus we have another model one which was here, which was tagged as well. Okay, so can you see how many key levels we had over here that confirmed that the price needed to go down? Okay, same thing here on the Euro USD. Here we had an inverse fair value gap. Okay, we went ahead and retested it again. Okay, once we retested this inverse fair value gap, what happened after that? We had what? We had this relevant high over here inside. Okay, we had a relevant high right over there which was taken out. Alright, so I can go ahead and delete this thing over here. So our bias was confirmed. Okay, but now you'll be asking me, why didn't the market reverse when it first tagged this fair value gap on the weekly and on the daily over here? You'll be asking, why didn't the market just go down? That's what I'll be explaining in this video right over here. Because these two lines over here is the week weekly fair value gap. Okay, this is the weekly fair value gap. Okay, so as you know that if you want to trade the weekly cycle, which compromises all from the days, okay, we need to use our 1 hour time frame. Okay, so let me just go down to my 1 hour time frame, because this is the time frame alignment. We want to trade the high of the week. The high of the week, we need to use the what? The 1 hour time frame, which is our time frame. So let me just go ahead and mark off last week's, the week of last week. So last week was our second week of the month. Okay, just so that you know, it was our second week of the month. So I can go ahead and divide my week into 4, but as you know that the week has 5 days. Okay, just want you to see what actually happened over here and why the trade played out on Friday. Okay, so I can go ahead and delete these lines over this new, what is this, weekly fair value gap, because we already know we were in a key level, right? Okay, so I have divided my week into 4 equal quarters. Okay, plus this Friday. So on Monday, market was opened up with a gap, started to expand to the upside. Tuesday did the same thing. Can you see? We were just expanding, going to what? To the key level. Okay. Then Wednesday, we had nothing here on Wednesday. It was just a consolidation day. Thursday took out Wednesday's high. Okay. Thursday took out Wednesday high, and the same thing happened here on the EURUSD. Okay, we took out these highs over here. So here was no sequential SMT for the weekly time frame. So this first sell was a fake move here. You could have caught this, but this was not the high of the week, because why? There was no sequential SMT between the days. Okay, now can we just take a look at how Friday, can you see this aggressive move to the downside? Why did it happen? We went ahead, and can you see on both pairs we took out the high? But what did I say is there? You need to focus on the body closure. Focus on the body closures. Okay, on the bodies. Focus. Take your focus on the body. So can you see that on EURUSD we close above this previous close and open of all over here? Can you see this previous closure of this body over here? We closed above it, but on the GBP USD we failed to do so. So this over here is sequential SMT, just not It's not just sequential SMT, it's hidden sequential SMT, because you could have not seen this if you only marked out these highs over here. If you mark these highs, there was no sequential SMT between these because these highs were purged. Okay, so right over here we had our what we call our weekly sequential SMT. Okay, let's find it over here. We had our weekly sequential SMT right over there. Okay, so once we had our weekly sequential SMT right over here, we want to see where the market, why did the market stop right over there. So there's more to this, guys. So if I just go and plug in this thing over here, can you see where the market went ahead and stopped right on this new week opening gap? Right here on this new week opening gap, that's where the market went ahead and stopped. This is not a mistake, guys. Okay, that's where the market went ahead and stopped. Okay, if I go ahead, I did not want to share this information right now, but okay, that is it. That's where the market went ahead and stopped. Okay, that's where the market went ahead and stopped. But okay, this is for the next lesson. I won't be explaining this, why the market went ahead and stopped right over there. You could have continued entries right over there. Firstly, I say there was a new week opening gap, which I already explained. Okay, so that was one. Then let me just go ahead and put the DXY on top. Can you see on the DXY? On DXY, this candle over here, and on the GBP USD, can you see this candle over here? This was a precision swing point, because on the DXY we expect this candle to be a bullish candle, but it was a down close candle, so this became a precision swing point right over here. Right over this, so I can just go back to EURUSD. So this right over here, this was this precision swing point right over here. This was an extra confluence. Okay, can you see how perfect this trade was on Friday? So this was the one shot 1Q of last week. Okay, this was basically it. I won't be going down to the lower time frame to show you the entries. I won't be doing that right now. I don't think I've got enough time to do that. So once the market has created a swing point, we want to take the market to the downside. Okay, so let's try and dive into that right now. Just go mark out this candle, this 3 o'clock candle, going down to my 5-minute time frame. So can you see the market just started to drop down, drop down, drop down. But can you see what was happening here? What we had over here? We had a micro cycle sequential SMT, which happened between this high over here and this high in between this high over here and this high over here. So there was a sequential SMT. Here was a sequential SMT on the lower time frame. So you could have taken your entries right here at this point over here, right over there, and you could have taken the market to the downside. So that was the entries on what? On the Forex in Forex trades last week, which was the second week of the month. Okay, so that was basically it. I wanted to show you the breakdown of the trade we went ahead and took last week. Okay, so this was basically it. That was basically it, and we targeted these lows over here, these failure swings over here. Okay, and this was the previous day low, which was taken out over here. Okay, so yeah guys, I'll be seeing you in the next videos. I hope you took some notes on this one, and yeah, I think I've been here for more than enough time. So yes, see you soon. Take care.